Okay, let's get things started. I am going to introduce Geoffrey Hansen and James Hursthouse, who's going to tell us all about the opportunities in the metaverse, because this VANTEC meeting is themed about the metaverse. And we hold these VANTEC meetings every single month, and we've been doing that since April '99. And lately, for the last few years, we've been alternating these VANTEC meetings with general themes and special themes. And you lucky people, we're in one of the specially themed months, opportunities in the metaverse. And I am going to introduce Geoffrey and James. Take it away, you two.
Hello, everybody. So I'm going to speak first, and then I'm going to introduce James, and we'll cover this topic as best we can. Interesting thing is I'm work in an investment bank, Garibaldi Capital Advisors. I track a lot of these tech markets in terms of what's going on. A lot of you probably know me from Rocket Builders, Ready to Rocket. I have this little blue bubble here, 8,700 investment pitches attended so far. And, I'm going to watch another 4 or 5 today. So we're going to add to that number. So let me jump right into what I'm going to talk about today. So I'm going to talk for about 20 minutes to give you a background on the space. What is the metaverse? What is, what does a company do? How do they make money? What's going on in the space? Is there a lot of investment going on? How do these companies get traction? And talk a little bit about, what are the challenges of investing in these companies, so I can advise you investors to understand how to look at these companies, because they are a little different than maybe a traditional SaaS software investment in terms of the dynamics of the IP and the revenue flows and things like that. So I'm going to run you all through that. Then I'm going to introduce James, who's an entrepreneur that's worked in the space and who's at the very leading edge, and he can share his insights on what's hot in the space and what he's learned from being this leading edge entrepreneur. And we'll then ask questions towards the end. So I think it's going to be a very interesting hour. So first of all, background on the metaverse. So the metaverse was a concept, first coined in 1992 in this book by Neil Stephenson. And I had the opportunity to read it in 1992, and I had the opportunity to read it again this last Christmas, because I thought it'd be fun to see how the world had changed. It was a dystopian vision of the future where everyone had to stay home, and all the power structure in the world was based on, the ability to deliver food to people's homes. So, no one can relate to that, can they? So my experience with what we today call the metaverse started in, I started as a software engineer, and my first video game was in 1980. So I've been at this for a very, very long time. For me, Tron was a key movie in 1982, which sort of transformed how I thought about the world. Before that, I was doing very two-dimensional games, and then there was this, great exhilaration that I could start to think about games in a 3D space. The very early VPL research was a spin-out from Atari, which did all the original VR research. We used to read about that as gamers, gaming developers, and get very excited about it. And I had the opportunity as a gamer to get, in 1989, this Power Glove, which went with the Nintendo Entertainment System, and these virtual I/O glasses, which came from a Seattle startup spun out of the University of Washington back in 1995. And I got to play with these toys, and they barely worked. But I was so passionate that eventually someday that I'd actually see them working the way they were intended. And we're actually at that stage now, and I'm quite excited to talk about it. People are afraid of the metaverse because they have some preconceptions, and I want to talk about some of those myths. First of all, they're afraid they have to wear the headset everywhere to interact, and no, that's not the case. I mean, at its purest form, you're going to wear the headset to get the most intense experience, but all of the things that we're talking about in the metaverse are being designed so they can be experienced also on flat screens and even on mobile devices. The other preconception is that you have to have, you have to be a rocket scientist basically, and that this technology was designed for engineers to understand 3D space. And no, the technology has evolved to the point where it's very, very simple and easy for the average consumer. And so a lot of people have a negative connotation with it, thinking this is some sort of, thing that Facebook's trying to force onto everyone, where it's actually been something that's been in development for a long time, and Facebook's just trying to co-opt this trend. But I actually think they have very little play in this compared to all the other things that are going on in the industry. So there are many definitions for the metaverse. If you asked a dozen people, you'd get a dozen answers on what it is. And I'm going to give you mine, and then when we get James on later, he'll give you his. But the very broad industry definition is a virtual world where people can interact, socialize, enjoy entertainment, and conduct business. It's a very broad definition. And you notice I didn't say in there that had to be a 3D visor I had to wear. It's a very, very broad definition that captures a lot of opportunity. But I have a very useful definition that I use for me to understand the space, and that is that I look at it from the value that gets created. And the value that gets created by this thing we call the metaverse comes from creating brand new experiences that people want, brand new marketplaces for people to do business or to subscribe or to engage in commerce. And it provides this other dimension of something very, very interesting, which is digital asset ownership, that you can own something that gets used in the world that you interact with. And once you start to understand those three concepts, a lot of this stuff that people talk about the metaverse start to make sense in terms of what the real business value is. So why now? And those of you that have attended some of these pitches with me, and I query the entrepreneurs, is I often ask that question. I think it's the most important question for anyone trying to raise money, is to answer the question, why now? What is the opportunity? Why should I invest now versus wait 6 months or a year before I invest? And what's interesting about what's going on here is I talked, for some reason, I'm the February guy for VANTEC. I talked last February about the pandemic trends that were driving investment. And I had mentioned that AR/VR was one of the things that was being highly stimulated. And that turned out to be true. It was highly stimulated, but there were other opportunities in the marketplace that came together at the same time. So there are many innovations and trends that converged at the same time. Device power, user audiences, demand for new types of experiences. All these things came together in a unique way that we really haven't seen very often. And that has created a pent-up demand and a market ready to explode. And that's what makes it very interesting. The last thing that happened in the last year is even more fascinating, is that some very lifelike experiences became possible on very standard hardware. So I want to talk about, I want to show you quickly a video, and I have to sort of explain this, that I'm going to show you an experience that is possible with your PlayStation or Xbox. And it's made possible by technology, by the Unreal Engine 5, and the theme is the Matrix. And unfortunately, I may not do it justice, because if you actually play on the console, it's actually very, very impressive that it feels like you're in a real world. But that lifelike experience is what the big breakthrough that's making the metaverse possible. And I'm going to show you just a minute of it. If you want to go back to it, I can send you the link. You can watch the whole video. But
I could become immortal.
Hi, I'm Carrie Ann Moss, and I played Trinity in the Matrix films. 20 years ago, we asked ourselves how long it would be before faces and bodies could be changed as easily as we change clothes.
We wondered, what would identity mean in a completely digital world?
And what would reality mean when a world we can build feels as real as our own? with your theoretical mumbo jumbo, but I need some sexy action.
Come watch this with me. They're presenting like why the
Marketing people.
Marketing? I thought we were supposed to have total creative control.
Welcome to the Matrix.
Okay, so what I've shown here is actual experience in the game. This is not them shooting movie on the street. So this is a 30 gigabyte download you can download into your Xbox or PlayStation. It gives lifelike experience. There's over 1 billion different polygons in order to create this world. There's 35,000 different metahumans. There's over 7,000 buildings and over 35,000 drivable cars in that 30 gigabyte download that's available on anyone's PlayStation or Xbox. So that is what the state of the art is in terms of what can we create that resembles the real world in the digital realm. So this convergence that makes this metaverse possible, there's actually 7 layers to consider, right? And I mentioned earlier that the most important part was these new experiences. So experience is the top layer. And that experience is available today, but it's available in games and it's available in certain live events. But as we move forward, those experiences will be available in much broader contexts in terms of every social experience, every live event, every theater, shopping experience will be there, right? Then there's also going to be a context of discovery where how do you find what's in the metaverse? There's going to be obviously advertising, there's going to be basic search and some artificial intelligence that helps you navigate and get to what you want to do. It's all based on the creator economy, that there's this broad audience. It's not one company making everything in that metaverse. And that it all relies on that 3D engine that I just showed you the example of on the PlayStation that's available in every device, whether it's our iPhone, our computer, our playing console. All that level of GPU technology and intelligence is available in everyday devices today. The challenge is, of course, that a lot of this stuff, our networks aren't optimized for it. It's going to have to be, because for us to have instant reaction that feels like the real world, we have to have very high bandwidth and we have to have very low latency. And then we have to have different ways of experiencing that new experience. So we need the human interface, whether that's smart glasses, a wearable, or some other flat screen representation of that new world. So all these layers of technology have come together at the same time to create this opportunity. And that lifelike experience, is such a jump in terms of what's possible. And all these things coming together, it's really unlike anything we've had in tech since maybe we launched this sort of app revolution with smartphones 10 years ago, or whether when we first started the internet, 20 years ago. It's that big a jump in terms of all the things that are possible and the number of people and devices that are ready for it. So it's a bit of a greenfield market, and that those that are in the space first, there's going to be a huge advantage to being that. Just like when you were one of the very first apps on the Apple App Store, there's a huge advantage compared to later on. So that's why there's all this pent-up demand and this opportunity for the metaverse. So whose metaverse is it? Well, in terms of the leading edge of the metaverse, there's obviously gaming companies like Fortnite. There's obviously in October, Facebook renamed their company Meta because they wanted to capitalize on it. Each of these companies have a different representation of parts of what we call the metaverse. They don't necessarily own it. And in fact, in the ideal world, there's an open environment where all these technologies work together so that if you have your virtual Nike sneakers, that's the virtual Nike sneakers you wear in every video game and every environment you go to. We're not quite there yet, but that is the promise of the metaverse. On the left here, I showed that what NVIDIA calls the omniverse, where they're trying to combine different creator technologies with different technologies to deliver those experiences on gaming systems or in computers or phones. So there's a number of different ecosystems forming, but they're all moving towards this sort of open architecture view of the world. But in the short term, you're going to experience that within a very, very specific context. It could be you're attending a live concert in Fortnite. It could be that you're engaging in some sort of social event in Meta, or you actually have some sort of other, maybe more business-oriented experiences driven by the GPUs from NVIDIA and a bunch of other companies they're partnered with. So they all have a very different view of the world. So really, who owns the metaverse? Well, many companies are creating parts of the metaverse, and the promise of it is this is all going to bring these different experiences together. And depending on the experience you want, there may be a different metaverse platform you're going to get that. So how big is this market? How fast is it growing? What's going on? It is, initially started as a fairly small market, and what we call this metaverse today in terms of a market, we measure in terms of what's going on in basically in the gaming world and how that's evolved into that aspect of the metaverse. But as we start to layer in the other things that are the social platforms, and we start to layer in all these other engagement technologies that are becoming available that make possible, commerce in the metaverse, et cetera, we start to see more and more spend over time. And a 40% growth rate in the tech sector probably makes it the largest high growth tech sector in the tech economy going forward. And that is going to translate into over 800 billion in spend by 2024. And that stat comes from Bloomberg. And by the time we get to 2030, it's going to have greater spend than the gaming, live event, and advertising markets combined. Because all of our experiences are going to be connected through these digital experiences. So traditionally, when I'm trying to analyze a market space and trying to understand where it is in terms of the adoption curve, there's two models I always go to. One is the Crossing the Chasm model by Geoffrey, and the other is this Gartner's hype cycle, right? Both are useful for me when I'm trying to analyze an emerging technology market space, but in the case of the metaverse, it's a little more difficult because there's so many different technologies coming together, so many different companies that have to partner to make things happen, and there's so many different sectors of the metaverse market that are moving at different speeds. So it's pretty hard to do, but one publication says that the metaverse, unlike the typical Gartner's hype cycle that has a down, it's basically going to be exponentially up because of all these things that continue to come together. It's not a one point of convergence, it's many years of convergence occurring over a number of the next few years. So the metaverse is rapidly able to accelerate adoption. Why we see it as such a huge market in the next 3 years is that we've already aggregated the audience of gaming and social people that are going to be involved in these metaverses. So it's not trying to find the audience is there. And the installed base of devices with sufficient intelligence, processing power, bandwidth, and display capabilities all are already in place. We don't have to wait for people to buy things. Before with VR, people saying, well, I have to wait till it's affordable for me to buy a headset. Well, that's likely to change in the next 3 years as well. But there's also the way the metaverse is evolving is that you can have that experience from a flat screen as well as from a 3D view. So how will this adoption occur? Well, it's going to happen in multiple sequential waves. So everything is going to move at a slightly different speed depending on the area that you're focused in. So we're obviously starting with gaming and marketing, and you can see big brands are starting to invest in this significantly. Then there's social, then there's events, live events, education, commerce, communication, and the workplace. So all these things are going to phase out. Some of the more pervasive things that affect how you work maybe take 3 years from now before they become start to impact you. But you can see that all these things are at an early stage of adoption now, and then it's just a matter of time before they ramp up. An interesting example for this would be looking at what Nike as a company is doing. So if we envision what Nike is doing, what they've done is they've envisioned that their brand has to be sustainable, as we move into a digital world. And Nike has invested the last 6 years in putting a lot of money into patents and researching how this is going to go. So it's not just they started this today. Nike is the first Fortune 500 to have a chief metaverse officer. Their first foray is to offer NFTs where you can go online in a 3D environment, design your kicks, your sneakers. Those sneakers today, you can have them as an NFT, or you can use that design as the basis of actually ordering the real world Nike sneakers customized that you want to buy. But the vision for the future is that those will also be the sneakers that all of your avatars and all the various representations of you in the metaverse will wear. And there'll be recognition of that. And that's what Nike has made a significant investment in, making sure they're at the leading edge of that. So if we look at the companies building the metaverse, if we look at perhaps maybe the top 100 companies that are already in place, they fall into this market map where we can see the different areas of technology innovation that's going on. So these are really the leaders in the space. These are the companies that probably have had over $50 million invested already, if not more. But there's also, behind this 100 companies, there are thousands of startups active in various areas of this space. And if I actually did a market map for those 1,000, there'd probably be, instead of these 8 categories, there'd probably be about 18 categories, right? Because it's spaces, there's a lot of innovation going on in different areas to fill gaps to make the metaverse possible. So how do these people make money? That's the big business question, right? It's complicated is the answer. And let me try to do my best at explaining how companies in the metaverse make money. So the best way to start is, how do those platforms make money? So I show an example here with Meta, which used to be Facebook, and with Roblox. So the metaverse business model for Facebook is not too different from their Facebook model, that it's a combination of applications and advertising. But there's also some interesting things where there's blockchain tokenized ownership of specific digital assets, and there's portability of digital items between different environments within that metaverse. So they expect for each of those actions to get transaction fees. And there's certain free entry into the metaverse initially, but anything you want to do, there may be a transaction fee associated with it. And there'll probably be a bunch of advertising in that new environment. Roblox, you can see from this is a very different way of looking at how their revenue streams work in terms of, they look at it in terms of how they have to share revenue with the ecosystem that's part of their metaverse, right? So developers get a share, app stores get a share, and then different other things happen in terms of investments that Roblox has to do to maintain the metaverse in order to make all the revenue flow. So then when we look back that into the specific startups, those specific startups are either providing apps, or they're providing digital assets, or they're providing functional glue that gives you certain functionality in that metaverse transactional environment. And there's going to be technology companies that enable marketing in the metaverse. There's going to be technology companies that enable media distribution, and there's going to be companies that simply help people customize their avatar to have certain attributes. So there's so many different revenue streams. What you're going to see that's challenging when you see a startup is you're going to see that there's no simple, it's not your simple SaaS company, right? And we've become too incremental with SaaS companies, and they all have the exact same business model, so they're very easy to analyze. And we've been spoiled by that. But when it comes to the metaverse, you'll find that some of them have a certain aspect of subscription. They'll have a certain aspect of usage fees. They'll have a certain aspect of transactional fees for certain things. So there, it becomes interesting about what the cross-sell is, what the retention, and how customer value grows over time. It's a very different dynamic than your typical SaaS company, but that's what makes it exciting to look at what's coming ahead with the metaverse. The key metrics will be a combination of things that we looked at as a SaaS company or what we might look at in a media company. There, how many active users there are, what's my average revenue per user, what other things can I cross-sell to those users once I capture them, and how can I retain those users? Do I have a sustainable community of people that want to keep coming back to me for that metaverse experience or for those transactions? So my day job is an investment banker, and I'm always looking at what's going on in the markets. And if we look at the public markets, there's been a lot of activity where people have been boosting their valuation by committing to the metaverse. There's also been some sort of interesting activity in terms of investment that, you know, this whole area of crypto investors, as well as more traditional institutional investors, maybe like a Goldman Sachs that is to date been very anti-crypto, they have all been collaborating in investment in a lot of these public ventures, which is interesting because basically they were on either side of the spectrum before this. So it's actually bringing a lot of stimulation in terms of new types of investment. And because of that, we're going to start to see a lot of new types of deals. And, you know, you may, if you believe the hype that I'm trying to share with you today, you might want to even restructure your portfolio to think about how different companies may be worth more because of this. And there's a number of ETFs and SPACs forming specifically around the metaverse. But if we look at terms of a more traditional venture capital style investment or private equity style investment, we see that there's the stuff that we can measure is the stuff that, you know, existed for a few years. That's gaming, online games, augmented reality, virtual worlds. But that doesn't capture all those thousands of smaller startups that I've been talking about because they haven't the institutional capital that we can track. There's been some large local investments in Vancouver. You know, several $100 million went into Dapper Labs. High Street is a promising marketplace for NFTs that's received $5 million investment recently. And then there's some very active, interesting types of investors that you maybe not used to seeing all on the same screen. So there's a lot of corporate investors, the leading one being NVIDIA that has a vested interest in the metaverse. Then we have our traditional VC, Sequoia and Andreessen Horowitz have both established segments of their portfolio as VCs to focus this. And there's been more of this crypto-focused investment funds like Pantera and Coinbase that are also seeking to capitalize on the metaverse. So it's changing a lot of that. And then there's on the corporate investment front, Sony took a minority interest in Epic Games where they invested $250 million to get only a small piece of Epic Games in order to have a play in the metaverse. The concern about what's going to happen in the metaverse has forced a lot of companies to make some very, very large acquisitions. Microsoft acquired Activision very recently. PlayStation acquired Bungie, and Nike, based on that story I told you what they're trying to do, acquired an NFT broker company. And locally in the Vancouver market, Unity acquired Ziva Dynamics, which was a very, very promising company in order to pull that asset into their plans for the metaverse. So if we're interested in investing in metaverse companies, we have to understand a little bit about how they get how they commercialize their innovations. And my traditional view of that was I followed this traction gap formula where is very useful for looking at SaaS companies, where I would look at, what's the minimum viable product. I would look at, minimum viable revenue model, and then I would see a minimum viable level of traction that would drive scaling up of the company. So I would go through those sequences if I was looking at a SaaS company. I would take a very different perspective of the metaverse, because I don't think it's so linear or obvious. So in the metaverse, I don't have minimum viable product. I have something slightly different that I look at in sequence. So I would look at what's the minimum viable experience. How is this company creating an experience that people demand, right? And what's the proof that they demand it and that they've satisfied the need for that? And then I have to figure out, based on that, I mentioned that revenue models are often multi-layered, where there's different ways these companies make money. So I need to make sure that there's a community of users, that there's enough critical mass, that there's enough going on there for there to be a revenue transaction base going, so that the revenue can flow and they can get into those cycles of cross-selling other stuff. And I need to know that that meaningful experience they've created, that people don't just come, try it, and then disappear and churn, that they actually keep coming back and there's a sustainable utilization of the innovation they've created in the metaverse. So what are the dynamics that you have to consider as an investor? And the first shock that some of you are going to get is that valuation is very different. First thing you're going to find is that the valuations of most of these metaverse companies is much higher than you'd see for your generic SaaS company. So we take that usual basis that we would look at your standard tech startup and saying, what's the team, what's the traction, what's the near-term revenue opportunity, and I think that company's, I'm comfortable with this valuation. The challenge is you have to look at, if they're entering in the metaverse, what size of addressable market is possible from the way they're entering that metaverse, what partners they have through those partnerships and that market access, what are the future revenue streams, and how deep is the intellectual property they have that give them a sustainable competitive advantage in what they're trying to do in the metaverse. And because that IP is often man years of investment that has already occurred before they come to you for investment, these four pillars together, we generally see much higher valuations for seed stage investments of metaverse companies. So I have some tips for investors, because some of them, some of the things I've said may get you excited, but also worried that, what is it I don't know that I should be afraid of? So first, make sure that company can answer that why now question, because like I said, some of these innovations may take a number of years for people to be able to capitalize them. Are they ahead of the curve too much, or is it the right timing? If you remember, Hootsuite in Vancouver was an example of a company that had absolutely perfect timing of entering the market at the very right time of explosion of social media, right? So you can't just generalize that every company can be that next Hootsuite. You have to really think, does this metaverse company have this opportunity to catch one of these early waves? It's a very different risk versus reward proposition, right? So some simple SaaS companies, there's very little risk, but it's gonna be steady growth, but it's not gonna get huge fast. Some of these metaverse opportunities, there's going to be a significant amount of risk, but if they get over the hump, the reward's going to be significantly higher. So you have to think about that risk reward profile a little differently. It's very important, their ecosystem position and the partnerships they have. So, what are the big industry players that are going to help them get access to the market? Are they motivated to help them? Do they have enough juice from those partnerships to get them to where they need to go? And are they focusing on simple steps to get there, or are they trying to boil the ocean too quickly? Those of you who've seen my webinar series at Venture Labs know that I always talk about the importance of a financial roadmap. So not just how much money they need today, but what is the call for cash over the next few years. Clear, some of these companies will be, once they get over the hump, they'll become very cash independent. Others will take many, many years to get to a cash flow positive situation because they're going to continually have to reinvest in content and other IP. You'll have to do scenario analysis because there's a number of ways you could see the metaverses that they're participating and evolving. So therefore, you can't just have the simple, it's going to take off viewpoint. You got to say, these things in the market have to happen. When they happen, this is when this will take off, and understand those scenarios. And some companies you're just going to say no to because they've tried too hard to layer too much together that makes it that there's too many moving parts. So, I've seen a lot of business plans lately that have an NFT component to it. But for me, they're just piling on more onto a bad value proposition, a bunch of other things that are trendy. So you're gonna have to sort through that as to are they actually gonna get where they need to go, and then are they gonna be able to layer on this other stuff? And be careful of false economy, because some investors I've seen get caught by thinking that they'll make a small amount on the company, but they'll make even more money on the tokenized economy being created by this company. It's very dangerous thinking. So I wanted to say that if you want to see my slides, please send me an email, jeff@garibaldicapital.com, and I'll happily share what I've just shared with you. And I'll also share you an invite to our forecast event on what's going on in investment in the tech sector. At this point, I'm going to bridge over to talking to James, and I'll let James start taking the screen here. How do I stop the screen?
I think if I share it, it'll stop yours automatically there, Jeff. So thanks for that. Let's hopefully this will work without too much of a technical.
So while James is kicking that up, I wanted to mention that I invited James because he's an entrepreneur who's actually been successful in the gaming industry for a number of years. He's been very adaptive at defining new technology areas in order to bring it to the gaming community. And he's the first that's sort of taken this metaverse concept and actually commercialized it in the local market in a very interesting way. And I thought he offers a very unique perspective of someone who's sort of surfing at the leading edge of the wave here for you guys to hear what he thinks is going on in the marketplace.
Okay, thanks, Jeff. Yeah, everybody can hear me okay, I guess, yeah? Okay. And every now and again, I'm up here in West Vancouver, and for some reason, my internet decides to take a little pause. So if you see me freeze, then everybody just wave at me frantically, and I'll wait for a couple of seconds before I continue. A lot of what I want to say today, there is overlap with what Jeff's already spoken about, but I think it's useful to have a couple of different viewpoints. Before I get going, I just want to acknowledge that I live and work and play on the unceded traditional territories of the Squamish, Tsleil-Waututh, and Musqueam First Nations, and grateful for the opportunity to do that. A little bit of background on me before I get going. So, founder and CEO at Departure Lounge, and also actually Chief Strategy Officer at AMP right now. I've been in the video games industry for over 20 years at this point. And actually, I realized along the way that I'm in the video games industry, or I was in the video games industry, because of my interest in Metaverse. At university, I studied philosophy. A lot of it was about computational model of the mind and the possibilities of things like sentient avatars and self-aware computers and all these kinds of things. So I was pretty fortunate, really, when I got going with my career, to have a very sort of front seat vantage point for the early days of massively multiplayer online games. And Jeff touched on a couple of those sorts of types of games. As far back as 2007, I was a contributing author to this thing called the Metaverse Roadmap, which is quite funny, actually, because that starts in 1992. Science fiction author Neil Stephenson coined the term metaverse, right? So in some ways, it's almost exactly like we're just sort of reliving that period of time. But it's quite interesting to see some of the projections and timelines that we we actually proposed back then. I did a ton of stuff between sort of 2007, moved to Canada in 2010, started Roadhouse, did a bunch of other things. And then most recently, I've been splitting my time, as I said, as Chief Strategy Officer of AMP Technologies or AMP Ventures, which is a public company now on the Canadian Securities Exchange, focused on high performance cloud and compute of the type that we think we will need to host the metaverse. And then recently, I started Departure Lounge to bring together my interest in a bunch of different metaverse initiatives, but actually vended that into AMP as of December. So we're all now part of the AMP family. So at Departure Lounge, we've got this sort of four-pronged approach to creating value across that metaverse ecosystem that Jeff described, all based on that foundation of the high performance cloud and compute offering that AMP has been developing, and primarily split into four key areas for us: tools and technologies, content and creative, utilizing those tools and technologies. And then actually a lot of what I'm going to talk about now is the influence of blockchain, decentralized finance, and give a little bit more background on why I think that sort of tokenization and NFTs, actually the key invention that have unlocked this opportunity that we have ahead of us. And interestingly, we have another group that's focused on real estate. And you're like, well, why would a real estate company be involved in a metaverse initiative? And it's really because of that blend of real world, virtual world spaces and how they overlap with each other. So things like blended concerts, blended live performance, theater in the metaverse, all these sorts of things. And actually in the other direction as well, where mixed reality technologies can really enhance the real world space around us. That's also very interesting for us. And in some ways, it's inevitable that those kinds of activities are also being generated. Departure Lounge has its own team. As I mentioned, I am part of AMP, but this is the Departure Lounge team, spanning industry vets and advisors, corporate development experts, technology, DeFi, and creative. And I won't really go into too much detail into all of those folks, but I'll make this presentation available later and you can check into the awesome team that we're putting together. And, there's a fair amount of work under our belts. Right now, it's sort of track record from previous engagements, previous companies. I used to say career highlight, but now I say career highlight so far was the opportunity to work with my favorite band, Iron Maiden. And so I was the originator of the Iron Maiden Legacy of the Beast mobile game when I was running Roadhouse. And I think that's interesting in a way that it was sort of a precursor to quite a lot of what we're seeing now with bands, brands, and that intersection with interactive that's happening. You might have seen, stories about Travis Scott's concert in Fortnite, or Ariana Grande, or who else, like Royal Blood in Roblox recently, attracting, audiences in the tens of millions. And so this idea of bringing bands and other sorts of performances into the metaverse is definitely a key component of where we see a lot of the things moving forward. Tools and technologies. So I mentioned four sort of key verticals that we're trying to address. Maybe this is a sort of Canadian approach. I didn't really want to start something that was sort of blue sky and was always working towards an idea. And I was pretty fortunate in a way to be able to do a deal with a company out of Los Angeles called MetaStage that's been in business for around 3 years now. And what we're doing is partnering with MetaStage to bring the world's leading 4D holographic capture facility up to Vancouver. So the wheels are in motion for launching that in, I'd say, Q2. Things are going pretty well at the moment. And we'll be operating MetaStage Vancouver as the exclusive provider of the Microsoft holographic capture platform here in BC. And obviously with BC being a world leader in mixed reality, we think that's going to be a pretty good sort of initial foundation from which we can build the rest of what we want to do. You can see with volumetric capture, what's happening here is we're using 106 cameras to immediately turn human performance into avatars or 3D models. Departure Lounge is actually called Departure Lounge because it's where you go for your journey into the metaverse and actually back out of it as well. Originally, we thought it was a sort of one directional thing, but again, as I said, it's certainly turning into a sort of bidirectional name, and not only actually people any longer, but also people, objects, and value in and out of the real world in the metaverse as well. And so the plan is to sort of put together a synergistic pipeline of tools and technologies that do that. And then I guess it's almost inevitable that you would end up you know, if you give creative folks access to these types of tools and tech, you're going to start getting creative initiatives, you know, almost developing naturally to take advantage of these types of tools and technologies that we put at their disposal. And you can see here some of the sort of amazing stuff that you can do. That, for example, is a test of the UFC, you know, full volumetric capture, so you can actually be inside the octagon there or inside the head of one of the fighters, stuff that you could never really do with traditional video. In terms of our location, we're going to be up at Cap U. This actually stems back to some of the work I did when I was executive director at DigiBC, where we really spent a lot of time focusing on work integrated learning, academic industry partnerships, you know, sort of trying to address the forthcoming talent shortage in high tech and digital content creation. So, you know, the sort of result of that finally is that the departure lounge, the real world departure lounge, is going to be headquartered up at Cap U in about 10,000 square feet, double height building there at Willow. But also, you know, we're going to have a presence across the metaverse, working with a local company called House of Kibar. And also we are the proud owners of land plot -66 199 in the sandbox, which you can see right there in the middle of that little diagram. And I'm not going to tell you how much we paid for that, but anyway, it's interesting that we want to be at the forefront of you know, deployment both in the real world and in the digital space. And there's a lot of things you can do with a virtual headquarters, and I'll look forward to letting you guys know more about that later on. So anyway, you know, Jeff said, come and talk about opportunities in the metaverse. I've been talking a fair amount. As I said, there's a little bit of overlap in what Jeff just talked about, but I think in a way there's also some different angles there. So my definition of what is the metaverse, you guys might be familiar with a venture capitalist called Matthew Ball. He's really established himself sort of as Mr. Metaverse in this space, and has a very, very interesting website, matthewball.vc, with a ton of really great content if you want to read more. So his definition is that the metaverse is a collective virtual shared space, including the sum of all virtual worlds in the internet, in some cases blended with real life, which is a slightly different definition from what Jeff had. I think you hear Web3 and metaverse sort of used interchangeably, although there's some subtle differences, but I don't think we'll go into that too much today. But really, it's sort of like an exponential coming together of a bunch of different technologies that are really allowing what folks would refer to as the embodied internet. It doesn't need a VR headset. It can be through a 2D screen. It can be through augmented reality glasses. It can be through your phone. I've actually sort of experienced iterations of an audio metaverse, right? And so we'll go on to some of the other key components for me, but definitely not necessarily virtual reality, not necessarily 3D space even. But what I think is very interesting and why there's so much investment coming into the space is this, right? Basically that it serves as a functional successor to the web. So if you think about going back to 1995 at the dawn of the current internet and thinking about what you might do in terms of investment at that point, you know, we're really at that point again where almost everything needs to get reinvented for basically becoming functional in this next chapter. And as a result of that, you know, greater reach, greater time spent, greater commercial activity, there's going to be even greater economic upside than the entire current internet. And also, even though it feels pretty bold statement, you know, I actually share Matthew's belief that once we get to the full realization of metaverse, it is the next great labor platform as we transition into sort of living, working, and playing a lot more in digital environments, right? So as a result of that, huge levels of investment, you know, Facebook spending 10 billion a year. Some of it you look at and you go, wow, that's really crazy in terms of folks spending half a $1 million on a virtual house. But, you know, it's interesting. I think what's going on here is that people are finding their way. People are starting to look at new paths forward. And I think it really will settle down into something meaningful. I think, Jeff, you said 18 sections or something, that this is a different sort of metaverse market map. This is from John Radoff, another games guy that we've known for years. He's out of the East Coast. So he's got 1, 2, 3, 4, 5, 6, seven sections. And you know, you can really see how rapidly the sector is burgeoning. But for me, and how I choose to look at things, I've sort of got a bit of a simpler view in a sense. And why I wanted to put Departure Lounge together and have it at the center of these 4 key trends. So there are a couple of other things like AI and machine learning that are really integral here, but I sort of choose to look at it this way, and I think maybe it's sort of like a games industry perspective. So, you know, first of all, as Jeff mentioned, developments in game technology, real-time virtual production, very key. Secondly, spatial software. And third, what I think is quite important actually is how this next chapter of the web can really foster and promote community affinity and what people are calling the passion economy. Now, what's interesting is that, you know, again, I mentioned sort of back in 2007, we were talking about Neil Stephenson, and obviously we had things like Second Life, which, you know, had a game engine, it had technology, it had community, it had affinity. But what it lacked actually, and I think the key point for me, and I realized, you know, relatively quickly, that it was blockchain, decentralized finance, and sort of the whole concept of tokenization actually, which has meant that the metaverse is viable now, right? Whereas it wasn't in 2003, 2004. So I'm going to spend a bit more time here actually explaining why I think that the blockchain and NFTs and the invention of those sorts of things have been the key catalyst. Before I do that, though, I will spend a little bit of time also talking about some of those 7 sections or the 7 categories, and delve in a little bit actually more into one of the ETFs that Jeff mentioned. So this is it was actually called the Meta ETF until quite recently they renamed it to METV. I don't actually know how you say that. I think it's like, I don't even know, but anyway, METV. This is now the Round Hill Ball Metaverse ETF. And so this is actually Matthew Ball's own, or at least the ETF that he worked on with Round Hill. And what's interesting about this actually is that you can see the sort of 7 layers. Back in June, or actually October, when we first really started monitoring this, they only had about $300 and something million worth of assets under management. So you can see how quickly this is growing. But also it's useful to see the different 7 layers of metaverse. And it, you know, if you look at this fund in detail, you can see that the high performance compute and cloud component is roughly 50% of where they've allocated their assets. It's about 20% into virtual platforms and environments like Roblox and those types of platforms. Fair amount going into payment, DeFi, crypto, and blockchain types of tools and technologies. A couple of other interesting things. The top 10 holdings in that ETF are 36 times revenue, which is a great valuation, you know, when you look at it from the perspective of an entrepreneur, an early stage investor. And actually and incidentally, this is how AMP Ventures looks at the world, as we decided to plug Departure Lounge on top of what AMP's been doing at the base. So even though it looks like AMP's only doing sort of 2 of those sections, they are the primary sort of 50%, 20% of that ETF is still going into that, into these components of the 7 layers. Jeff talked about game technology and its advances, so I'm not going to spend very long on here. I think one interesting thing to note is that it's not actually just the game engine technology, although obviously engines have got to the point where we can do amazing things. But also, if you think about, you know, the design frameworks and the meta games of free to play, and the way in which that was a sort of whole new mode of engagement, you know, there are many things that come from the games industry which are now underpinning, you know, more sort of engagement, more economies, more frameworks across multiple sectors of society, right? And so this video games write the first draft of history is a phrase that, as a games industry person, you know, we really like. That was coined in around 2014, I think, when Facebook first acquired Oculus. But it's been part of the dialogue that we've had actually with the provincial government around tax credit, and sort of this point that, you know, we really think that a vibrant video games industry is necessary for innovation in general. You know, you can definitely plot a direct path between the virtual currencies and the soft currencies of World of Warcraft and some of the early stage massively multiplayer online games, straight through to crypto and the real developments that have happened there. You know, Brock Pierce used to have a company that used to trade World of Warcraft gold on the gray market in Hong Kong, and, you know, now he's chairman of the Bitcoin Foundation, for example. So there's many direct links from the innovations from the games industry that we can see that have become prevalent across society, and I think it'll carry on. I want to spend a little bit of time talking about sort of some of the other technology that we look at. This is MetaStage, and it's quite useful to see how game engine starts to influence other other activities, right? So this is an advert that was created with pop singer called Charlie XCX. What's happened here is that she went down to MetaStage, probably spent about 2 or 3 hours in the green screen environment. So 2-3 hours. And as a result of that, it meant that she was turned into a model ready for use in whether it was a video game or any type of interactive experience. So what that meant was that we could bring her into Engine. So this is actually now that hologram inside Unreal. That's actually 60,000 polygons per frame and 30 gigabytes of data per second. So when you start thinking about why do we need high performance cloud and compute and a whole new type of computing, that's the answer right there. What it does allow us to do, first of all, we can start messing around with things like the illumination on the character, duplication on the character, transformation of the character. But basically what's going on now is that all of the worlds that we wanted to film Charlie in were created inside the game engine, right? And so you can see there that there's this switch between the real natural human performance and the model, right? So what happens is you only need talent for about 2-3 hours, maybe slightly longer than that. She's done all of her performances against the green screen and now become this fully volumetric video hologram. And what you can see going on here, if you look at it, you can see the virtual camera. So basically what happens is the camera crew moves inside to Unreal using virtual reality headsets and film the hologram doing its performance against all of the Unreal backgrounds that had been built in advance, right? So the lighting on the stage is actually taking its cues from the Unreal game engine, lighting it for the evening or lighting it for an urban environment, so that when we bring the hologram into the engine, we're able to film it as though talent was there, right? So in this particular case, what's going on is that we're getting sort of 4 or 5 days of location shooting with talent, even though we only needed talent for about 2 hours. And so that's probably a key, one of the key drivers there in terms of being able to move things forward with technologies like volumetric capture as they come to reality. And so there you can sort of see the output where it's a single performance that's been brought into multiple game environments. Now, this one's also very interesting. I think, Jeff was talking about the Matrix in terms of that being probably the pinnacle of game technology. This one for me is actually Ziva. We mentioned the Ziva acquisition by Unity. And this one blows me away because it's actually a combination of artificial intelligence and machine learning, digital double technology and performance and the rigging and everything that goes into it, all being rendered in real time. So I'm only just going to play like 2 or 3 seconds of this just so you can see it. But I actually, for me, when I saw this one, even though I've been in the industry for 20 years, I'm like, that truly is, as I said at the beginning, as you start to move towards the concept of sentient avatars and all these sorts of things, I don't think this avatar is sentient, but it's doing a really, really good job of convincing you that it might be. So here's sort of 4 or 5 seconds of where we've got to with the state of the art.
Hi, I'm a virtual human created by Ziva Dynamics. I'm powered by state-of-the-art biomechanical simulation, and I'm running in real time in Unity. But enough about me.
Yeah. And then obviously, game engine is not just for game characters and those sorts of things anymore. Here's some work by one of the guys that recently joined us at Departure Lounge. This is game engine in architecture. This is all synthetic modeling, actually. So there's no scanning involved in anything here. It's all just synthetic. What I find quite funny at the moment is this is Unreal guy, right? So if you ever got any familiarity with the Unreal game engine, this character here is the character that you get out of the box. You can make him however tall you want or whatever, but basically it's Unreal guy. And there you can see him running around a sort of Viking metaverse block out that we've just sort of put together for a couple of things that we're up to. But what's funny is here's Unreal guy in the BMW factory of the future. So BMW worked with NVIDIA to create a full digital twin of their factory. And that sort of blends everything that you can see from a game engine in terms of very, very precise modeling. But also, in this case, it's not just a visual simulation. They fully digitally twinned the entire factory so that they can work out things like, position of the conveyor belts, like worker health. And there you see like Unreal guy actually working in this fully synthetic BMW factory so that when they build the factory for real, everything needs to go and everything's been optimized in advance. What I find also really cool about this is that they're training the machine vision robots in the virtual space, right? And so here you can see this is the machine vision robot looking at a whole bunch of different, options and potential scenarios where, it needs to recognize different things. But rather than doing that in the real world, they train it in the virtual space. And then when the real robot gets deployed, the software inside the robot already knows what it's supposed to do because it's practiced a million outcomes inside the virtual space previously, right? Okay, next thing, spatial software. I said there were 4 key things, so I'll go through these quickly. Now, there's a lot of debate on the internet right now. It's like, well, metaverse, isn't it just video games, right? And so there's one thing that I really do think, again, as part of what I've been saying about the importance of blockchain. Yes, you've got Fortnite. Yes, you've got Roblox, and obviously Roblox, massive success. Yes, you've got collectible card games and all these kinds of things. But so what's the difference, right? So here we've got this new generation of, Roblox-like environments, particularly the sandbox feels quite a lot like Roblox. And obviously, games like Axie Infinity, where people are just sort of fundamentally battling cards against each other. What is the difference? Again, I think there's 2 things. The first one is this move towards interoperability. And what that really means is the ability to take assets from one video game or one digital platform and move them across into another. Right now, it's a much longer talk than we've got time for today to talk about the challenges for game economy design and how it's difficult enough to design your own game economy, never mind 100 of them.
If I could jump in, James, they've been telling us that we're running out of time, so we have about 5 minutes, and
Okay.
it's my fault. I talk too much, and so
no worries. I can go fast if that's all right. So I mean, so I'll go pretty quickly then. So, but what again? To go back to Matthew Ball's key point at the beginning, I really do think what's going on here is that we're practicing for non-gaming applications, right? The future of the digital work platform. And I'll spend a little bit of time on this because the other reason I know that something really big is happening is because of the way in which I actually think some of what's going on right now is most likely illegal, right? So I have a fair amount of experience in sweepstakes technology and sort of sweepstakes games. I have a mobile games company that kind of pioneered the ability to give away real cash and prizes through video games. And we did that because if you know anything about gambling, there are three things that you need in order to have gambling, right? Consideration or stake. You have to have chance or components of randomness, and you have to have prizes of value, right? So in a sweepstakes, no purchase necessary, you remove consideration, you only have chance and prize. So as a result of that, that's a legal sweepstakes, and McDonald's monopoly uses those rules and all these sorts of things. With real gambling, you put your money down, you've got chance, and then you can win something of value. Now with free-to-play, traditional free-to-play games, the argument was, well, the prizes that you win have got no value, right? So, you could have loot boxes with random number generators in them. You could spend 100 hours, you could spend $30, $100 playing that video game, but ultimately, the traditional free-to-play guys would be, oh yeah, but the prizes have got no value. You can't sell them to each other, and they don't have any value. Now, what's actually going on with play to earn is that all of a sudden you end up winning stuff that can be transferred through the internet, right? So you end up, again, I think, with chance, consideration, and you get prizes of value. And as a result of that, I know that something really disruptive is happening, right? And so that speaks again as to why I think tokenization and NFT is the key invention, right? So on the one hand here, you've got, OpenSea, $13.3 billion, right? You've got sport-focused NFT startups, and folks like Dapper Labs, great local success, raising 900 million. On the other hand, you've got things like saying, well, we don't really want all of this value and all these sorts of stuff to come into video games because it kind of messes stuff up. Now, I do think that we're actually living in like the tulip mania of the 17th century at the moment, where there's a lot of speculation and there's a lot of stuff going on. But I do think that there is really something important, and why NFT in the end is going to be the key invention here. So I'm just going to take 2 minutes just to explain a little bit about NFT so people if they don't get it. So I went through this journey, or I was similar. I was like, I don't really understand that. But then what I realized was that the whole point of token is that it's almost like money that has rules associated with it, right? So you see this thing, what is a token? It's a digital thing that sits on the blockchain, gets the benefits of blockchain. So it can't be copied if that's what the contract says, or it can be copied if that's what the contract says. Token has a contract associated with it containing a bunch of instructions, right, at its heart. And the token can actually evolve over time. And the token wraps cultural values in a meaningful way. And so this is why it's very important. Now, this one here is an Avenged Sevenfold. I knew it wouldn't take very long for me to bring Rock and Metal into the conversation, but Avenged Sevenfold issued a token. And one of the key things that you can see here is that this particular death bat, of which there are about 9,000, very few of them have free tickets for life, right? But this particular style of death bat, if you are the owner of this, you get free tickets to watch this band for life. And each of them has different types of properties. And as a result of that, you can see why I think people are adopting NFT in a major way, right? So the other key piece that I didn't kind of understand until quite recently is how the NFT's instructions not only say, okay, every time it gets sold backwards and forwards, pay the original creator 10%, but also here's a set of instructions for actually creating that asset. So 4-foot high table, it's made of wood, you can break it. If I want to build that asset in the sandbox, it'll look like it should in the sandbox. So here you can see, this is a couple of examples from a local company called House of Kibar, where they've taken the instructions that are in the NFT and they've just decided to basically pass those instructions in a different game style, right? So you could have the same item in Roblox, you could have the same item in Decentraland, you can have the same item in a much higher visual fidelity environment, and that's where the real transferability comes from, right? Now, again, challenges for game designers, but really, really mind-blowing when you get around the idea that it's almost like money with instructions, right? Or any number of different instructions. So for example, last thing, and I know I've got to finish up, I just bought some tickets to go and see a band here in Vancouver. I got a free NFT. And I'm like, well, why would I get a free NFT? But imagine if you had 100,000 fans or 100,000 followers and you give them all an NFT, right? 500 of them give you free tickets for life. What's going to happen? Those are the ones that are going to start trading backwards and forwards. And every time they trade backwards and forwards, you end up making 10% as the original creator. Or even more, I say, look, if you watch my video content for 100 hours, or you come and play my game for 20 hours, or you go and buy, I don't know, 700 loaves of bread at the store, I'm going to upgrade your NFT to have free tickets for life, right? And so then you've gone and managed to have this sort of living NFT scenario where the value has been able to be generated over time. Okay, so I have a whole bunch of stuff about open versus closed metaverse. We went through that previously. I don't think it's, really the time to dig into this stuff. So I will just get to the end where I'm talking about my conclusions and summary. So what should we invest in? So first of all, I would do a mixed approach, safe traditional investments in the picks and shovels. That's still the chip manufacturers. I would definitely buy some Qualcomm at the moment. I think Qualcomm's got the potential to be the chip provider of the metaverse. Hardware platforms, game engines, all of those things, emerging platforms and social spaces. I think we'll see a ton of niche audience, like sort of passion economy things where people will start to wrap culture that's very important to them. And I just explained how NFT allows you to do that and continually generate value, right? Which is a really important piece. Interoperability, Jeff touched on the concept of Web3, and a key component of Web3 is this interoperability component. Again, I mentioned House of Kibar already. They're a local company. Order Inbox is another local company working on interoperability between blockchains so that I can buy my NFT on one and not have to worry that I bought it on the wrong blockchain. Deep story, but that's really key. Passion economy players. And when I mean that, I mean, what's going on, for example, is people buy like an NBA Top Shot card or whatever it is, they're buying their way into a group of people who they share an affinity with, right? It's very interesting to see if you look at real world events for crypto or for NFT holders, that sense of sort of community, which is being generated by being a co-owner in this sort of cultural shift, is very, very, to me, quite obvious and quite pervasive. And I think Holdr is going to be doing a presentation later, and again, sort of wrapping up passion for a particular genre, particular style of things, very interesting, because the NFT now provides real value, or a real direct value and a real correlation of value to people's sort of cultural passions, I guess. And then finally, Web3 players, and particularly those people who are working to solve the issues of identity and data in this next chapter, data transformation, very, very interesting. So A little bit more reading. I'll share this with you. There's 3 reports that I go and refer to a lot: Into the Metaverse, Wunderman Thompson, Future 100, and then this Metaverse Manifesto by Alan Smithson from a company actually called Metaverse out of Toronto, I think, or Ontario. And that's it. Sorry, a little bit over, but there you go.
It wouldn't be a James and Jeff presentation, or it did run over.
If we didn't go over, that's true. Why break with tradition? So, anyway.
Well, James and Jeff, that was a really great show. That was fantastic content. I'm just looking in the chat, and I've just got such great accolades for you. Now, we don't have time for Q&A right now, but we do have breakout rooms, and we're going to have a special Jeff and James breakout room after all the presentations. So hold your questions, think of your questions, join the breakout room after the VANTEC. So we'll just get started here. Like, you know that VANTEC's been meeting monthly since April 1999. So we can legitimately say that we span 2 centuries worth of entrepreneurs pitching to us angel investors. Our mission since we started was to grow the angel investing community and the investments made in our ecosystem. So we've had almost, well, we have close to 200 members. That number should be shot up more. And we've had close to 3,000 companies that presented every single month since 1999. And a good number of them have received investments. Investment by members, the first half, we got numbers for the first half of 2021. We're in the midst of getting the data for the second half of 2021, but so far 95 companies have received $8.2 million worth of investments. And it's underreported because for some reason you VANTEC members are rather shy about bragging about how much you invest. But in 2020, we had invested in 87 companies with a $14.6 million. So I think we're on our way to break that record. Now you'll be receiving some emails from us to please fill out the data, because this is really important. We're members of a couple of professional angel groups, the Canadian-based National Angel Capital Organization and the American-based Angel Capital Association, and they both need data. That's what they need to, help promote our angel investment community, because we're so key in the economy of our countries. That we have a couple of really active funds. eFund is a community fund. We've made 14 investments during 2021. And Woodif, founded by my colleague, Mike Volker, and who is also the founder of VANTEC, made 16 investments and 20 follow-ons during 2021. And both of our funds have made a good profit with the Redland technology exit. So anybody who's invested in those funds are in a really good mood right now. And of course, it's not just eFund and Woodif, but those are the most prominent funds used for VANTEC companies, but there are other funds as well. If you want to find out anything more about that, just email info@efund.ca and just contact Mike Volker at Woodif. We have members and they're growing. It's almost 200 members. Our full membership is only $600 a year. If you are also associated with a partner group like Angel Forum or Keiretsu, or if you're part of a fund like eFund or Woodif, it gets reduced to $400 a year. And if you just want to do online membership only, it's $300 a year. And you could go to the website and find out a lot more details than what's listed here. Few things that we're doing new for 2022. I'll start from the bottom up, because hybrid, we are so over meeting over Zoom and virtual, because I really miss that in-person contact. I'm sure a lot of you are too. So hopefully we're going to get that started with our next month's meeting in March. It'll be hybrid. Those that will want to come in person can. There's a limit because the regulations allow us only up to 50 people. And we will have this hybrid Zoom meeting going on as well. We will also have office hours. So if you want to talk to founder, that happens, or investor to investors, that will happen. So just request a meeting by sending us your request to info@vantec.ca. And deep dives. We did this last month. It turned out to be quite valuable for the presenting company. So we're presenting all of our full presenters. So there are 4 full presenters today. They will not only get their own breakout room after our presentations, but they will have the opportunity to host their own deep dives so that potential investors can come to the deep dives and be able to ask more penetrating questions, deep dives. Of course, we couldn't do this without our annual sponsors. Some of them have been with us since the very, very beginning. Shout out to Fasken, Tandem, TD Bank, SFU Venture Labs, who is also our venue sponsor, because they're generously given us space in their offices to have our VANTEC meetings in our VANTEC office. Western Pacific Trust Company, Invest Ventures, Raymond James, OKR Financial, KTAX. And I believe we have a new sponsor, Go Recruitment. We have a number of community partners that help run VANTEC in the background. That's eFund, Woodif, Front Funder, Tandem, Volition, Spring, Keiretsu Forum, Rocket Builders, Angel Capital Association, NACO, and the Canadian government through Western Economic Diversification Funds. Our agenda today, you could take a look at it on our website, vantec.ca, click to the calendar, click to today's, and I believe Wendy has put the link in the chat, so you could do a quick click there. But we're going to start off with some community announcements. We've always been very active with the community and support our ecosystem partners. And then we will start with the company presentations. We have one update today, and we have a number of previews, and then we have full presentations. And after that, we will have our breakout rooms for founder and investor networking. Community announcements. Allison, if you're in the audience, do you want to say a few words about Western Pacific Trust Company?
Sure. Thank you, Salsal. Can I just try and share my screen for a little bit?
Sure, I'll just stop sharing and it's your turn.
Western Pacific Trust Company has been helping startups raise capital through self-administered plans, registered plans for a number of years. We're a BC-based boutique trust company focused on the private capital markets. And we work with founders essentially to maximize their capital raise options. People can investors invest through RSPs, TFSAs, LIRAs, and put those registered funds to work. They can either transfer registered funds from a bank or a broker with no tax consequence because it's registered funds to registered funds. They can contribute new funds and get a tax deduction, or they can even contribute shares that they already own as an in-kind contribution. So go through that. And then basically there are just so many structures that are eligible, RSP TFSA eligible, that it's a really comprehensive list, including SAFEs, VCCs, EBCs, mix, as well as just your basic standard thing. And the EBC RSP advantage is one that I'm so sorry, I'm so inept, I can't share my screen, but basically, if I could, I just wanted to go over that sort of the advantage of also being an EBC if you're a founder or an issuer. Take a notional investor who is making a new RSP contribution, and say she's in the highest tax bracket. So she's going to get a 53.5% RSP refund on the purchase of your shares. And if you're an EBC, she's going to get an additional 30% tax credit. So that that investor is going to get 83.5% return on her investment in your company in the very first year, which is fairly jaw-dropping and something that is very compelling for your prospective investors. So we're competitive, we're responsive. You'll always get somebody to answer the phone. You won't be passed around, and they will know where your company is at with Western Pacific. And we also have in-house tax and legal skills to provide constructive guidance to you to set up your offering so that it is RSP eligible. So thank you very much. Sorry about that. I will now no longer share my screen. If I can find out how to do that.
Okay, I think we got it, Allison. Your
Excellent.
superpowers is to help us with the EBCs and VCCs. So it's wonderful to have Western Pacific Trust Company as part of our ecosystem. I think almost 20 years you've been doing it, almost from the beginning of VANTEC as well.
It's a while.
That's right. Okay, our next 90-second community service announcements is from Danielle Graham from Toronto. She's going to talk about Archangel, how the Archangel is partnering up with our West Coast investments. Danielle, are you there?
Yes, thank you, Thelzel. And I will say that my allegiance maintains with Vancouver, as I was born in Vancouver. So, and particularly today when it's a dark, stormy night. So I'm excited to share more about Archangel. It is currently an angel stage fund consortium of angel investors and venture capitalists from the Greater Toronto and Waterloo tech ecosystems. And now with the work we're doing with Thelzel, we're including Vancouver in that mix. Our Archangel network of funds offers a unique access to build diversified portfolio of early stage innovative tech companies and some really experienced, incredible deep tech angels in the group. The big community announcement that I have to share is that we have a new fund focused on women called Phoenix Fire. I'll just share personally that I came up with that name while watching Hunger Games, so hopefully it's memorable. And what we're looking to do is invest in women entrepreneurs from across Canada. So that absolutely, most definitely includes BC-based women-led startups. We are actually taking capital from women angels themselves, the majority of whom are currently women of color in the fund. And so if you know anyone who'd be interested in this type of funding, who'd like to get involved, or you'd even like to introduce me to other women-led startups, we'd be super keen to hear more from the Vancouver, the VANTEC community.
Excellent. Thank you, Danielle. And we could probably contact you if you put your contact information in the chat so that people can find out more about Archangel network of funds, including Phoenix Fire. We have Raymond Toe. I think should be on the line. So he's our newest sponsor. He can talk about Go Recruitment.
Thank you, Thelzel. Can I share my screen?
Yes, you may.
Okay, give me the... Good to meet everybody. Good to see some friends, names that we're all familiar with. I also have my business partner online, Anna Sojanya, as well. So if you see her name, that's who she is. So I just have so just be mindful. Let me start the clock. I'll give myself 60 seconds, right? The classic elevator pitch. So what Go Recruitment does, we work with startups and large companies, and the honor to be a sponsor. Thelzel and I have known each other, Jeff, Dave, a lot of people there. So for many years, so happy to give back. So we borrowed this slide from Solder. Anna and I first met each other, what, 30 years ago, when we were both doing our MBA. So to this day, we still give back a lot to Solder. So apologies to Solder for borrowing their background there. So a little about us. We picked gray because we have a lot of gray hair. So that's just kind of inside joke. So together we've got about 60 years of experience all in tech. And we love startups. We even invest in some, and which I'll show in a subsequent slide. So we're here to help everyone, building a company, avoid some mistakes and really maximize the opportunities that are in front of you. And a lot of people say hiring is a headache, but we disagree. We think hiring actually can be fun. So we're happy to sort of share with you some of our experiences. So later on, we should definitely, if you like, we have our emails, you can book a time with us. So these are some of the companies, and this gives you an example why there's so much demand. These are some of the companies you may not even have heard about, but these are ones that are hiring a lot here in Vancouver, and keeps us very, very busy. And in terms of our angel investment, I was fortunate to, some of our clients, we actually take some equity in. So when Mobidia got purchased by App Annie, we're fortunate to benefit from that. And when Sierra Wireless bought InMotion, we were part of a little bit of that as well. So currently I'm invested in Life Booster and Get SoftServe. So I'd like to get involved with the early stage companies, as Ann and I both have shared. So we want to make this set up 60 seconds. I'm running out of time. Just some free advice, right? We want to make sure we're not just here to sell. Even in this call, these are 4 takeaways we'd like you all to take away. That basically take your time to hire someone, even though there's pressure to hire people. And having access to real-time market data is valuable, especially during compensation time. Salaries are not necessarily that crazy because we'll talk about that, but and we always say use the criteria when you're hiring someone. Those are our 3 C's framework, right? And that was it. Yeah, let's talk, and we'll be happy to help you guys avoid some mistakes.
Great, thank you so much. Of course, you'll put your contact information in chat so that people can contact you directly. Great. We love supporting each other in the community, and there's 3 great companies right there. Okay, so we're hiring too at VANTEC. We're looking for the right talent to help us. So we're looking for a community manager up to 20 hours a month, and also an administrative assistant for our fast growing VANTEC Startup Visa program. So more info, go to the agenda, take a look at the jobs page, or just go send an email to info@vantec.ca, and we'll get you all set up, whether you or other people that might be good to take on these roles. Upcoming events, you just heard from 3 of our community members, but we've got a lot going on in our community. Take a look at our agenda. It lists all of these events. Investor feedback, we're always looking to improve. We changed a lot since that first meeting in April 1999, when we had 3 20-minute presentations to about a dozen angel investors, and look at us now. I think we're bigger, we're better. Hopefully we're better. So we're going to be having some 90-second pitches. We need your audience participation. Vote for your favorite 90-second pitch. The top companies will be invited back for a full presentation. We will have breakout rooms. I just announced that we will have Jeff and James in a single breakout room. We will also have a breakout room for each of the full presenters. There are 4 of them today. And then after you leave today, we're going to be sending an event survey. So we like to know what you think, what we can improve, because we're always improving. So the way the breakout rooms will work is that after all the company presentations, we will have 2 cycles of 10 minutes each. 1 breakout room for each of the full presenters, including one for James and Jeff. That will go through 2 cycles of 10 minutes. And after that, we will have random 5-minute breakout rooms. We will also have a couple of spare rooms available. So, give us your request. Our VANTEC team will put you into private rooms if that's your request. House rules, please mute your phone, mute yourself. We just want to concentrate on the companies. And after presentations, please network. No soliciting unless you're a presenting company. Make sure you identify yourself with your company name in the front or as an investor. Tips for entrepreneurs, this is your big chance to network with everybody. Network with investors, invite interested investors for your follow-on meetings and demos. Keep them updated with your own email updates and your Gus profile up to date. Now, what VANTEC does behind the scenes is that we share your information with other angel groups, particularly the Pacific Northwest angel groups. And I said at the beginning that we have a number of companies that pitch on both sides of the border. We'd like to grow that interface. Number of ways to connect online: Gus, DocSend, Slack. We can, investors can offer the contact information on the company feedback forms. So those feedback forms are really important. And then there's the deep dives for the full presenters. So all these details will be available in our communication platforms. Our deep dives for this month will happen next Wednesday on February 9th. So we'll feature GameDriver, ｙMAGEN, Univoice, and Sonically. And here's the email address for each of those full presentations, so that if you're interested in a deep dive, contact these people, the presenters of the full presentations, for an invitation to their deep dive session. And connect with us. Lots of different ways to do that. Okay, so I'm going to stop sharing and to turn it to the main feature of our event, which is all the different companies. We have an update from Hidden Bands. Hidden Bands actually presented a full presentation last month. Well, we asked them to come back because they are part of the Metaverse theme. In fact, all the companies are part of the Metaverse theme. So Nicole, let's have you share your screen and let's start with deep dive. And Jackson is so kind to create a time clock for you so you can keep track of your time. So whenever you're ready, you can start.
Hi, everyone. I'm Nicole, the CEO of Hidden Bands. We are the first geolocation AR app for music in the metaverse, and we recently named one of the top 20 new music tech startups in the world. You can think of us as Pokemon Go for music. Hidden Bands is focused on helping artists strengthen their connection and experience with music fans. Artists can pre-release music on our platform. We can instantly launch music with an AR experience into thousands of real-world locations all around North America. Players use a Hidden Bands mobile app to find, rate, and re-hide music for other players to find, engaging music fans in a hunt for a limited number of singles only available on our platform. We're now also testing with geospatial audio. We launched in June of 2020 and have seen major improvement in player retention and are now receiving artist submissions from around the world. We have 3 revenue streams, with 2 already returning early money. Our biggest update is that we are breaking our investment into 2 parts, rewarding early investors for early participation. The first $1 million we're raising on a safe that will help to expedite key technology development and partnerships. In the summer, we'll have a major release with big named artists where we'll no doubt see an inflection point on user growth. At that point, we'll be raising another $1.5 to $2 million as a seed round at a much higher valuation to a pool of already interested US VCs specific to the space. Our team of music and gaming professionals looks forward to the possibility of your participation in our round. Thank you so much.
Thank you so much, Hidden Bands. Our apologies for starting our VANTEC late, so hopefully we still have our companies on hand. Immersive Tech, are you still on the line?
Here I am.
Oh, excellent. We thought we lost you. Okay, let's get the show started.
All right, let me share my screen here. All right, let's rock and roll.
Anytime, Tim.
All right. So yeah, Tim Bieber, Immersive Tech CEO. We recently listed on the CSC VR AR. What we are is the leading out-of-home VR attractions company. We basically believe, I mean, there's a lot of definitions being thrown around on what the metaverse is, but the first iteration of the metaverse is going to be immersive. It's immersive environments, and immersive is VR. It's VR entertainment. So what we have as far as a metaverse network today is that we power over 300 VR arcades, VR centers around the world. We have a catalog collection of over 325 games. And across that network last year alone was over 17 million player minutes. So we have a substantial network already that we're networking into our metaverse. We have pioneered the world's first standalone hyper immersive VR attraction. It's a 40-foot shipping container, 6-player experience where you step inside of this and the entire container reacts to the game, motion floor, pneumatic air blast, scent effect, temperatures. We're deploying these across the US in Q1 and Q2. We have over 5 years of experience building these types of immersive experiences for companies and brands around the world, and a stellar leadership team. 2 people I'll highlight from our board: Alvin Grayland, who is the HTC China president. HTC is the maker of the Vive headset, and Kathy Hackle, who is known as the godmother of the metaverse. And so you can follow us, LinkedIn. You can check our stockouts, CSE, ticker VRAR. If you've got any questions, Immersive Tech. So there's a quick rundown. 90 seconds is a challenge, but happy to give you guys a good peek into what we're doing here.
Excellent. Thank you, Tim. All these companies will be putting their contact information in the chat, so please take note of it so you can follow up. Next up is Traxe Technologies.
Hello, this is Ahmed from Traxe Technologies. As you all know, mislabeling is a global pain in all markets. In the seafood markets, more than 40% of products are mislabeled. Our solution is our mobile application and API services for brands to tokenize their products' metadata and identity to guarantee their provenance. Metaverse Commerce has created a unique way of immersing customers. With our solution, brands are enabled to sell to their customers in a direct-to-end consumer model in a fully authentic way. We charge our customers per token, and we aim to generate 70 million annual revenue by 2027. Our market is not limited to food, but our beachhead market is seafood market. We have a team with diverse background. I studied technology commercialization at SFU and information technology at EPFL in Switzerland. I exited my previous venture, which became eventually the largest video streaming service in Iran. We plan to deliver our MVP in 6 months and our API services in 2 years. Our ask is to raise $1 million, and so far we have secured half of this amount. Thank you very much for your attention.
Thank you very much. Next up, I believe, is Holdr.
Okay, I'm good to start. So good afternoon. My name is Buck, and I'm the co-founder of Holdr. So Holdr is a music NFT platform that allows artists to crowdsource funds from their fans in exchange for VIP perks like early access to tickets, discounted shows, discounted merchandise, logged content, and other incentives. Holdr was built by Chaos Club Digital, which is a record label in Vancouver. And we've been working in the music industry for the last few years, building relationships with stakeholders, other labels, managers, which we've been using to gain early traction on our platform. Holdr makes money from transaction fees when NFT collections are listed by the artists. We're here today to connect with other Web3 companies in the space and seeking funding for the further development of Holdr. The opportunity at hand is that artists are always looking for ways to raise capital to scale their careers. Traditional ways of raising capital aren't often available to artists, and often the channels that are will take up to 85% in the form of major labels. We're trying to build a platform that focuses not only on NFTs as something that's tradable, but something with real utility and that can build community and deepen the relationships between artists and fans. We're here today seeking $300,000 through a safe to continue the development of Holdr. Thank you very much for your time, and we can share the full deck with you anytime afterwards. Thank you.
Thank you so much. That was a very good presentation, to the point. Next up is Silver Dice Games.
All right. Hello, my name is Sabrina and I am the founder of Silver Dice Games. At Silver Dice, we develop virtual reality games. We want to take immersive storytelling and player control to the next level with next generation VR technologies. Our goal is to be a global leader technologically and creatively in the virtual reality gaming industry and to create new and unique ways for people to play games and interact. Key members include Greg and myself. I've worked in the industry for around 10 years at studios like Ubisoft and on teams behind characters like Thanos in Avengers Infinity War. Greg, our lead game designer, has 15 years of experience in the industry, and he has worked on titles like Pistol Whip and Fez. An advisor we have on our team is David. He's been in the industry for 20 years and also worked at Ubisoft, but now runs his own studio in Montreal. Our business model is straightforward. We develop and sell games for a set price. We are firm believers in the opportunities that this medium can provide. We have 2 wholly owned projects planned and in development. This slide showcases exits and acquisitions in our industry, which happens often. We would like to position, oh my goodness. We would like to position ourselves for this type of opportunity in the future. That being said, our goals, to achieve our goals, we would like to continue to grow our team. And to do that, we're looking for funding and investors interested in video games with relevant experience to join us on this journey where we will solidify the foundation of what is virtual reality. Thank you.
Thank you so much. Okay,
Thank
that
you.
was Silver Dice Games. Okay, next up is Repose.
Hi there. I'm Olivia. I'm the founder of Repose, and this is Leighton. We'll just get our screen pulled up. Okay, so we are Repose. We're looking for early investors who understand the promise and potential of Web3 and the creator economy. So Repose is a platform offering NFT-gated social clubs for fashion and beauty creators who have a following on Instagram, YouTube, or TikTok. Think exclusive communities that are interest-specific, accessed by a verified NFT. Repose introduces a shift in flow of value on social media. So brands sponsor highly targeted clubs and a whole community benefits. We're making it possible for creators to own their content and audiences and more meaningfully connect with their followers for long-term value using digital collectibles.
Repose solves several problems. Creators don't own their content or accounts. Followers are missing community connections, and the existing NFT space is only for the crypto familiar. Repose gives fashion and beauty creators the ability to own and better monetize their content by minting and selling membership tokens, NFTs, that act as with unique utility right on the platform.
So why do we think we'll win? We deeply understand our female market. We've successfully built for them before, and now we're applying that expertise to a custom Web3 experience. We are about accessibility, usability, and relatability, and building a product that actually works for our audience.
We're in the process of building out our MVP, and we're looking for investors who understand the opportunity to help bring Repose to market later this year. We look forward to connecting with you. We'll happily share a full deck with you, and we'll leave our contact details in the chat. Thank you.
Excellent. Thank you, everyone. Those are all the 90-second presenters. So take a look at the chat, everyone. Not only have these presenters put their contact information, but you will see a link where you will choose your favorite 90-second pitch. The ones with the top scores will be invited to a session where they might be selected for a full presentation. So please do that. And if you feel so inclined, also give your contact information on this form so that we could pass it along to these 90-second pitches. All right, once these pitches are selected for full presenters, we have 4 of them today. How this works is that we have an angel sponsor who will introduce each of the full presenters. The full presenters have 5 minutes to present, and then we move on. After all the presentations are done, there will be breakout rooms, and each of the full presenters will have their own dedicated breakout room. So first up is GameDriver. And I believe Richard Miller, you're on the line to introduce GameDriver and tell us why you think we should pay extra attention to GameDriver.
Hi all. So I'm pleased to introduce GameDriver. It's a company I've invested in and have been advising since August of last year. So I'm pretty excited about GameDriver, very excited about GameDriver, because they've identified a really big problem, QA and testing in video game, AR development, and have developed a solution. The market for the solution is huge. It's currently about $2.5 billion, and it's growing to $6.5 billion in a few years. They have a great team with over 30 years of industry relevant experience in software test automation. The product, which is in the market and selling, is unique, patented, and scalable. So with that, I'd like to turn it over to Rob Gutierrez, CEO of GameDriver.
Thank you.
Go ahead, please.
Okay. Hi, I'm Rob, co-founder and CEO of GameDriver. At GameDriver, we believe that we're about to experience the start of the next wave of the software revolution. The adoption of from the adoption of home computing and multimedia PCs in the 90s to the dot-com boom and bust, Web 2.0, and then mobile. The adoption of video gaming and virtual and augmented reality to our everyday lives is not just coming, but it's already here. Before you can deliver any software, though, you've got to test it. 40% of development costs are spent on quality assurance and testing, a percentage that's only increasing. For the past 30 years, the testing problem has been tackled by adding automation wherever possible to increase speed and lower the immense human capital costs of quality. This has tended to serve us well, albeit with some room for improvement. Today, gaming is the largest entertainment industry and XR the fastest growing software vertical, worth a combined $500 billion by 2025. Geoffrey's presentation earlier covered this more. Unfortunately, today's automated testing options are completely incapable of working in this space, and as a result, 90% of testing is still manual. Only GameDriver can fill this urgent need. Our founding team has introduced nearly a half dozen testing tools to the market and is bringing everything we know about the software automation industry to GameDriver, and we know a lot. Our patented software is the only reusable, scalable, and plug-and-play platform for test automation of all immersive experiences. Since fully entering the market in mid-2021, we've booked about $20,000 in annual recurring revenue using a SaaS annual subscription licensing model with customers in gaming, virtual reality, and enterprise software. While we're working on several large multi-$100,000 ARR deals, at the other end of the spectrum, we're selling subscriptions into mid-sized studios and enterprises at $500 per user per year. These will provide the basis for expansion and upselling. History shows that test tooling is very, very sticky. Consumption tends to grow, and net retention rates greatly exceed the broader market averages. GameDriver's advantages come from several pillars. Testing in this vertical is an underserved $2.5 billion market. A patented approach which provides the ease of access of familiar tooling while extending the paradigm to a new technology universe. Established partnerships with the most important players in this space, including game engine providers and console manufacturers. Our strong relationships within the testing industry leaders for easy access to strategic partnerships and building blockers up to hold any potential competitors at bay. Now, speaking of competition, our largest competitor is the status quo, manual testing. During pre-screening, members of this very group said, if they can do what they claim, then this is big. My challenge is to remove the if from that sentence. Our claims are being validated. Other competitors include third-party test libraries and tooling from the engines themselves, and quite bluntly, these are a mess. For example, last year, one game engine threw out their entire testing system and started a new one. A year after talking about record and replay, another engine dissolved the team and ended life their proposed solution in December. Our most direct competitor, a company called Altum, has produced no less than 3 completely different approaches to the problem of test object identification in the past 18 months alone. Our patent comes from our novel approach to the problem of object recognition is what lets GameDriver locate and manipulate any object within a game scene, whether public, private, or protected. Where they churn, we're laser focused. We've built our MVP and validated our product with paying customers in all of our key markets and have recently entered a 30-year renewal with our first customer. To grow, we need to raise capital to command the market as the kettle starts to boil. We're in the process of a $2 million base seed round on a $10 million pre-money valuation. These funds will allow us to extend our lead by supporting additional game engines and platforms, building high-value premium use cases to increase revenue per user, and adding quality of life user enhancements such as record and replay functionality to make it easier for our customers to drive expansion. Post-investment, our development team will enable us to support nearly 3/4 of games in development on both Unity and the Unreal Engine. We'll certify support for all major consoles, including PlayStation, Xbox, and the Switch, in addition to the desktop and mobile environments we support today. We'll add key content marketing and sales resources to build mindshare and drive sales. As this round has already partially been filled, we've begun negotiating for the remainder, and so much of this is already underway. We're confident there's a ton of room to grow still, but exit scenarios are always on our mind. QA tooling businesses generate stable, predictable revenue and are a private equity darling. A consolidation play is also a possibility as an established player in the space decides to enter a new vertical. In this business, the commercial game engines like to keep a full set of lifecycle management tooling in-house. With how much trouble they're having delivering, this is also a possibility. I hope that I piqued your interest, and I welcome you to join me in our breakout room a little bit later. We'll also be hosting a deep dive session next week, and I understand that the link will be provided to you in your package after the session. If not, please reach out to me directly at the email address. Vancouver is a global hotspot for game and XR development, and we're always looking for introductions to companies we can help. And in fact, I've already reached out to one of the earlier presenters today. Thank you very much, and I look forward to speaking with you soon.
Thank you very much, GameDriver. We look forward to your breakout room after the presentations. Next up is ymagine. So I believe that Arvid Ali should be on the line. Yes,
hey,
great.
Can you hear me?
Yes, welcome.
Awesome,
Tell
thank you
us-
so much.
Yeah, tell us why we should pay attention to ymagene.
Yeah, so just as a quick background on myself, I was most recently the president for all of Jordan Belfort's corporation, the guy depicted in the Wolf of Wall Street movie. Prior to that, I was the global managing director for Shaun White, who's now at the Olympics again. And more importantly, prior to all of that, I was actually responsible for scaling 5 different Silicon Valley companies to over $1 billion value. And one of them I'm helping take public at a 10 billion value soon. So all that's really to say, though, out of every company that I've personally encountered, I'd say they all kind of pale in comparison to what I'm seeing with ymagene. So if I had to boil it down in a nutshell, I'd say ymagene is sort of the most innovative thing that I've seen since the advent of the personal computer. So I don't want to spoil it, but I'll let you guys take it from here.
Okay.
Thanks, Arvid. All right, can you hear me okay?
Yes.
Perfect. Thanks, Arvid, very much for that warm introduction. Thank you, everyone, for your time. My name's Jeff Binder. I'm one of the co-founders. Our company is pronounced ymagene, and ymagene is actually an acronym for our mission of empowering a generation. So we're an augmented reality company that really marries the physical and digital worlds without the need for glasses or headsets. We're here talking about the metaverse, and we're all promised this great metaverse, but the joke is all we've really got is expensive JPEGs and a headache. We're really building what we consider to be the real metaverse, and it's holographic in nature. Holograms do exist, but we don't often see them because they're very expensive and cumbersome to deploy up until now. So I'd like to show you what this looks like. So what you're looking at here is a 30-foot wide dual plane holographic display. And many of you are familiar with Jason Momoa, John Hamm, Peter Diamandis. So this is all real footage. These speakers and presenters actually are appearing life-size and look like they're physically on stage. Now, the miraculous thing is that they can actually look like they're physically on stage at many locations simultaneously. And if they're presenting live, which they can also do from a studio, they actually can see their audience and answer questions in real time across multiple audiences simultaneously. What's also cool is they can integrate CGI into their presentation, and because the display is so massive, this content appears fully 3D to audiences looking at this in person. The speaker, even when they're looking into the camera at a studio on a green screen, regardless of where you're sitting in the audience, it actually looks like they're looking directly at you. And here you can see, I muted the audio, but you can see imagery floating from the back plane into the foreplane. And if we could hear the audio, what the speaker is actually talking about is that our brain is actually hardwired to better understand complicated subject matter when it's rendered visually in 3D before us. So it's a fantastic platform for learning. All right. So similar to Tesla and what they did for the electric car, we've developed holographic technology to be massively scalable and cost effective for the first time. So it can be everywhere really with the push of a button. Our company was founded really by three experts in technology, finance, and events. I come from the software giant Oracle, where I'm the head of product performance and availability. ｙMAGEN started one of the largest consumer aviation shows and is a retired air traffic controller. He's with us here tonight as well. And Hans is the North American CFO for a global $2 billion manufacturing company. So we bring a lot of expertise to the table. And I know you're thinking it, the reality is technology like this can and will be applied to multiple markets. But for our initial focus, we're really focusing on the educational market, which may surprise some of you, but there's a few reasons. Number one, universities do have large budgets. Right now, after COVID has basically throat punched them, they're rather desperate to get all the students back on campus. And students are really the really high value component of this, because students are going to make technology like this viral on social media, and you can't buy marketing for a better price than that. And the reality is the institutions already want to pay us for a solution like this. There's about 30,000, just under 30,000 universities and colleges globally. In the United States, the average one has about $1.5 billion as an endowment. And we're unveiling what we call the real metaverse at Demo Day in September at 3 universities, East Coast, West Coast, and Central North America, where we will be inviting all the other institutional leaders to be present, and we will begin taking pre-orders for the first time, just like Elon did with the Tesla Model S when it first came out. So revenue sources, we have 3: hardware, content, and services. From a hardware perspective, our 30-foot dual plane displays. We also provide digital studios to go on campus that allows institutions to create content and broadcast from. And we're also producing our own holographic speaker series, which will premiere 1 year from now in February, to demonstrate the power of the platform. And of course, we also monetize institutionally created content as well. So what does all this cost? Which is one of the beauties of our solution. We charge $10,000 a month per display point, and $2,500 a month per studio, plus a 30% fee on all content distributed through our network. From a revenue projection perspective, you can see about 5 years from now, we expect to be at about 170 million in annual revenue and about 54 million in net after-tax profits. So today we're raising a minimum of 2.5 million as a seed round, structured as a SAFE. We're going to be using that for our demo day to get our hardware production ready and lock in our speaker series, as well as do some patent filings that we're currently working on. So we hope some of you here will join us in helping to build the holographic superhighway to deliver some of the world's best across institutions in person, which we think is a very important component, and online at scale. Thank you very much.
Thank you very much, ymAGEN. Everybody take a look at the chat. We're at the halfway point of the full presenters. You'll see a link to do feedback for ymAGEN, and also scroll up a little bit. You'll see the link to do feedback for GameDriver. These are really important to the companies. We've survey after survey find that these companies often go to VANTEC as part of their early raises. So any feedback that you can give them will help them in their future fundraising. So take a look. Let us know how GameDriver did, and let us know how ymAGEN did. Okay, now we're going to move on to our third full presentation, Univoice. And Ian Henderson, I believe you're online to tell us
I'm here.
why.
Yep.
Yeah, tell us why we should pay special attention to Univoice.
Sure. So let me tell you, everyone, a little bit about myself first. Up until recently, I worked for Spotify, where I ran a team that was responsible for all their agreements with record labels globally. Before that, I worked for Sony Music, where I ran a team that was responsible for negotiating with people like Spotify. So when Sammy came to me in late 2020 and told me he had an idea for how to use music to help people learn foreign languages, I immediately thought foreign language education is a huge market, and record labels and music publishers are going to want a piece of that. The other reason is a more personal reason why I became an investor and an advisor to Univoice. My wife is Russian. She spent a lot of time teaching Russian kids how to speak English in her younger days. And so when she told me that the best way to learn foreign languages was to teach people how to sing in foreign languages, I said, hey, I just met somebody who has an app that can do that. So I've been advising Sammy on all his record label and music publisher negotiations for about 18 months now, and I've been really impressed with his persistence. So please take a good listen. Thanks.
Thank you. So Sammy, you'll present Univoice.
Yes, ma'am. All right, guys, apologies in advance for slight ambient noise. It is raining outside and I've muffled the noise as much as possible. So we're doing what we can. Thanks again, Ian, for the wonderful and warm introduction. I'll start off with screen share here. Make sure that I'm sharing my full screen. All right. Can somebody confirm that you're seeing what I'm seeing?
Yes.
Okay, great. Hello, everybody. My name is Sammy Halaby. I'm the founder and CEO at Univoice. The online language learning space is flooded with clone language applications teaching through pretty flashcards and randomized practice sentences. We're changing the language game with a new but proven approach to learning. Univoice is the first mobile app that's teaching the world languages exclusively through music. To frame the conversation, the biggest pain points in the e-language learning space are a lack of engagement and a lack of retention. According to Statista, the e-learning industry experienced the lowest 30-day mobile user retention in 2020 out of 31 industries. In just 3 months' time, upon launching our beta, we surpassed the industry standard by more than 1,200%, reaching an average 30-day mobile user retention of 26%. By combining language education with the neuroscientifically backed method of music, we are setting a new standard for immersive language learning. Curious to see how the app works? Here's a very, very brief video of the app in action to at least capture the look and feel. So you may be thinking, cool product, but how big is the opportunity really? Well, per a study that came out late last year, the online language market TAM is projected to triple from 17 billion in 2020 to 47 billion in 2025. Up to 2 billion people are learning languages at any time, with about 500 million of them learning through online or digital methods. Leading a team of 6, here are the executives that are bringing this vision to life. Myself, Sammy Halaby, the founder and CEO. I'm a lifelong language learner, fluent in 5 languages. I come from a Fortune 50 background, most recently in digital marketing, where my team managed marketing budgets in the tens of millions. Enrique Ortiz, our CTO, has amassed 30 years in tech, has served us as South by Southwest board advisor for 10 years, written 3 books on mobile engineering, 4 patents, and was named a top 50 mobile influencer by SAP. Supplementing our exec team's expertise is our hands-on board of advisors, featuring industry leaders like Ian Henderson, today's angel sponsor, and the ex-global head of label licensing at Spotify, and Puran Parsani, former head of international growth at Babbel, the world's highest grossing language app. We're implementing their playbooks for user growth, engagement, and activation. Our beta engagement stats are showing promising signs, with a 41% month-over-month lift in monthly active users and a 46% month-over-month lift in monthly sessions. Nearly 50% of our free users are completing 5 or more app sessions, while nearly 2% of our active users are becoming paid subscribers, as compared to Duolingo's 4% rate. Univoice's freemium to premium subscription model is sticky, with a beta product yielding $7 average revenue per paying user. All free users get 5 minutes access per day, but can subscribe to premium for unlimited access. By Q2, we're looking to roll out an a la carte purchase model of single plays, in addition to premium plans, with an aim to reach $14 ARPPU. We have a series of paid and organic acquisition channels, the primary being Facebook and Instagram ads, Apple search ads, and influencer marketing. At current efficiency, 5K monthly ad spend yields 1,900 users monthly, which is 50% of our targeted new user goal. We've reduced our CAC by 211% since March of 2021, and will continue to optimize our paid and organic plays to reach our goals. We've raised $650K in pre-seed to date and are seeking another $950K by start of Q2. We're raising via SAFE on a 7 million post money, converting into standard preferred equity. We'll be using the funds to double our song library in size, add a new language, most likely Italian or Portuguese, scale our engineering team from 3 to 5 heads to deliver version 1 by Q2, as well as expand our in-house marketing efforts. And lastly, to double both our monthly new user and our monthly repeat user volumes. By leveraging our product first growth strategy, we'll reach 20 million in revenue by 2027 and begin entertaining M&A offers. Through extensive market research, strategy sessions, and conversations with the users, we've identified a happy path to reach these goals, which is outlined in this product roadmap. We'll reach profitability at start of 2024, which will in turn attract acquisition interest. I'll keep this presentation summary up for your review as we wrap up. I'll post my contact details in the Zoom chat, along with details to our product deep dive next Wednesday, which will be at 12 p.m. PST rather than 4 p.m. And I really thank you for your attention, your time. Look forward to answering your questions.
Great, excellent. Thank you very much. Everybody take a look in the chat. As Sammy says, there's contact information there. And also more importantly, a link to the company feedback. Tell us what you think about Univoice. Next up is Sonically, and Chuck Hamilton should be on the line.
I am.
Good, Chuck. What's so great about Sonically?
Hello all, thanks for listening and thanks for taking the time to see what Sonically is all about. Many of you know me in the network as an advisor, and some of you know me as the Chief Learning Officer at Meet Amy. But also some of you may know that I'm an amateur musician, a hacker is what people would say. When I got a chance to meet Elmo and team, and I started to understand what they were going to try to do with Sonically, and understood how deep domain in the music side of the industry, particularly in production, and understanding how deep his domain knowledge was and the team's knowledge was, and understanding how they were also going deep dive on blockchain, NFT, and the metaverse, I realized that they're on a collision course for success. And I was very inspired by what they're trying to do for everyone who's going to become a Sonically customer. So that's why I'm involved, and here's the team.
Great, thank you, Elmo. Take it away.
Hi, we're Sonically. We make blockchain games that educate music creators. I'm Elmo Chong, and that's my co-founder, Andrew Choi. We're both award-winning K-pop producers who have worked with the best recording artists in the industry, such as EXO, Rain, and NCT. When we were young, the music lessons we received didn't teach us how to make music. Much later in life, we learned on our own with music production software. It took a really long time to get good because finding resources to learn music making fundamentals was really hard. This problem still exists today as aspiring music creators mostly learn from long YouTube tutorials that are hard to pay attention to. We want to solve this problem by revolutionizing music education with a series of blockchain games that help people learn to make music in a fun and easy way. This is a large market as global music production software is projected to reach $12.1 billion by 2027. Our apps combine the best worlds of edtech, music tech, gaming, and blockchain to help music creators overcome the barriers that occur when learning new skills or improving existing skills. Here's how they work. Players will play and learn specific music creator fundamentals ranging from mixing, music theory, songwriting, and beat making. As they learn, they earn crypto tokens called hit coins. With their coins, players can access more education from NFT video collectibles that not only give rare music producer insights from top hit makers in the industry, but also give players exclusive unlocks to live music making seminars and workshops. Players can also purchase studio upgrades that elevate the sonic quality of their music creations. These limited NFTs will provide status and utility in the form of audio effect plugins, song packs, and reskins. Meet James. He's frustrated with his progress as a music creator. He's using Ableton Live software, but is having trouble learning the basics, especially making good mixes of his music. He finds it hard to apply the long lessons from YouTube tutorials to his workflow, as he has struggled with attention deficit disorder his whole life. He often thinks about quitting altogether, but doesn't, because he loves making his own music and dreams of being the next big hit maker like Pharrell. To make ends meet, he has a full-time job as an Uber driver, which he hopes to quit one day as soon as he makes enough progress with his music career. In the meantime, on his work breaks, he uses Sonically's apps to train, earn tokens, and elevate his skills. Here's how he does it. As for the business model, pre-product market fit, Sonically will earn revenue from a subscription of $12.99 per month and $99.99 per year. We expect to launch this version of our first application in 3 to 6 months. Post-product market fit, Sonically will transition to a tokenized business model where we will earn revenue from the initial sale of our NFT collectibles, then receive a fee for every future marketplace transaction they produce. Our estimated timeline for this would be in the middle of 2023. At Sonically, we're not just making games. We're creating an ecosystem of learning where people can invest in their own personal and creative growth. Our first game, Mixmaster, has over 5,000 people sign up for the launch, and with 3,000 downloads by beta testers actively playing an average of 5 minutes per session, future growth looks very promising. Once again, we're Sonically. Our aim is to educate music creators on the blockchain. Our ask is $1.5 million at a $10 million post-money valuation. This money will be used to hire game developers, engineers, designers, and marketers. This will help us achieve fast, defensible growth through network effects, so we can 10 to 100x your investment in 5 to 10 years. So if you're a passionate investor who sees creativity with music as an important frontier, please come along for the journey, so together we can help people all over the world learn to create music without fear. Thank you.
Thank you, Sonically. Everyone take a look in the chat. Not only will you find Elmo's contact information, but you will find a link to fill out what you really think about Sonically. So take a bit of time. The full presenter links are the feedback forms for each of the full presenter links are in chat for GameDriver, for Sonically, for ymAGEN, and for Univoice. And take a bit of time to fill that out because that's really important to them. I just wanted to take a little bit of time here to thank everybody who was on this, this on the team to put everything together. The VANTEC team, that's Kathy, Jackson, Peter, Wendy. They're the people who are working the magic behind the scenes. And thank all the presenters for making their presentations today. And so we'll look forward to seeing everybody at next month's VANTEC meeting on the 2nd of March.